For everyone who doesn't know me, I'm Jo and one of the directors who looks after medical clients in the Child Office. So I'm just going to touch on a couple of tax legislation areas actually. IR35 being the first of these. Now I spoke about this last year, but it had just literally come in when we started the course. So it's just really a recap for those that may not have actually done anything to do with this, or just a recap on the rules for those who are looking at it. So originally IR35 was introduced in 2000, actually the legislation has been there, but what changed last April is that for yourselves it became your responsibility to actually check whether, typically this relates to locums, whether the locums actually fall under this legislation or not. There was some question last year whether GP practices actually were public sector bodies, and absolutely you are, so this applies to yourselves. What it actually applies to, so for your locums who are self-employed, working for you, this legislation doesn't actually apply. The rules actually still probably apply when you're assessing whether they should be employees or not, but IR35 doesn't apply to them. It applies where you might have a locum who you are paying via their own personal company. So I don't know how many people actually employ locums in that way. Do you see a lot of locums through companies? No? Yeah, a few. Yeah. Typically why people did that was because actually for yourselves you don't have to pay national insurance and there's no employment rights attached to working through a company. And for the individuals they'd actually pay a lower rate of tax than they would if they were self-employed or employees. So there were some quite big benefits, which is why HMRC have cracked down on this. There is on the HMRC website, there is a employment status checklist you can complete. To be honest, you probably need a degree in employment law to be able to complete it properly and actually have the right answers. And it is a very subjective area as to what is right, what is wrong. But you do need to be looking at that and assessing it. So what's actually happened a year on? Well, actually, to be honest, not a lot really. HMRC haven't really mentioned it since they've introduced it. We're not aware of them actually checking up on anyone. A lot of out-of-hours providers had a bit of a panic initially and moved a lot of individual GPs onto employment contracts as a result of this. But other than that, we haven't actually seen a lot happening. But what is important is not to actually think, well, actually, not what's happening with this, I don't need to worry about it. Because HMRC actually have the right to go back 6 years and check. And if they think you haven't applied this properly in 6 years, they can then request PAYE, national insurance and penalties from you. Now, if that locum has now disappeared off to Australia or wherever, you can't find them to reclaim that PAYE from them. That's your cost as a practice. So whilst there isn't much going on with it at the moment, it is important that you're checking the status for anyone who might fall under this regulation. So what do you need to look out for? How do you know if someone should be treated under this or not? So the main areas are, do they have an obligation to work for you, and do you have an obligation to offer them work? Now probably typically for most locums, no, you don't have an obligation to offer it to them, and vice versa. Do they actually have some kind of financial risk? So do they provide their own equipment? Do they pay for their own indemnity costs, for example? That will also be key to whether they're actually employed or not. Do they have the right, if they can't make it one morning, do they have the right to send someone else in their place? Now that's a bit more subjective one, because probably not actually. You don't want someone just suddenly turning up, you have no idea who it is, coming to do a locum session. So that one's a bit more subjective. Where it typically applies is where you've got someone who, say, regularly does a Tuesday morning every week, has done for the last 6 months, year, they will absolutely fall under this regulation. If it's for a fixed period, so say for maternity or sickness, then less so, because you can demonstrate actually it's for a specific reason that they're doing it. But if they're regularly doing it as just general cover every week or every fortnight or regularly, then they will fall under this regulation. One other thing is the control. That's something else that's looked at. Who tells them what to do, when to do it, how to do it? So that sort of is something else that HMRC will look at to establish this. There is on the BMA website, there is a guidance about this that you can read and ask questions about it, which is quite useful actually. So if you're not sure, it's worth having a look at that and actually seeing if your locums fall within this. So what do you do if IR35 does apply? Well, basically you treat them as if they're an employee and you put them through the payroll. you charge PAYE and national insurance on what you're paying them. You don't charge pension. Pension isn't relevant in this circumstance, and they don't have any employment rights attached to that. So it's purely putting them through the payroll to process the PAYE and national insurance. You then deduct that, pay them the net amount, and pay that over with your normal payroll costs. Okay. If you are employing locums through an agency, it's not your responsibility to deduct the PAYE from them. It is, however, HMRC have put on their guidance that if you feel they fall within this legislation, you should tell the agency that you believe they are under IR35, but it's not your responsibility to deduct the PAYE and pay it over. It is the agency's responsibility to do so. So the second thing that I'm just going to talk about is making tax digital. Now this was on the agenda last year and we scrapped it because they decided to delay it as the day before actually I was doing my talk last year. Things have moved on a bit since then, and what actually is happening is for VAT registered businesses or those with turnover over the VAT threshold will have to start reporting under Making Tax Digital from next April. So the whole point of this is not, you might think actually, well, we already do that. We process our data on whatever system we use, we submit it electronically to HMRC through their portal. That isn't what's meant by this. What Making Tax Digital will do is actually to send all of your data to HMRC. So every single individual transaction for VAT purposes. So basically what you're putting into your QuickBooks, your Iris, your Sage or whatever you're using. So for VAT, for those of you who are VAT registered, this will have impact from next April. For other businesses that aren't VAT registered, it will be 2020 at the earliest, and for companies and large partnerships, it's likely to be later than that. So for some of you who aren't VAT registered, you can bury your heads in the sand for a little bit longer, but for those that are VAT registered, you do need to be considering and looking at this. So what we're expecting to happen actually, if you're using software, especially if you're using online software, we would fully expect all of these software providers to actually adapt their software to be able to deal with this. So hopefully there won't be much change for those of you who are using QuickBooks Online or whatever it might be. But what you do need to be doing is actually checking with your software providers and making sure that they are expecting to be ready by next April to deal with this. If you use spreadsheets, then HMRC have said that you will have to use some kind of bridging software, so you can continue to use Excel spreadsheets if you're using those, but there will be the need for some bridging software to actually take the information from Excel and send it across to HMRC. As with most things with HMRC, they don't yet know what the software is going to be, they don't know how it's going to work, what it's going to cost, so at the moment there's not a lot you can actually do with that, just being aware that something might be required. For some of you who may be using software that doesn't calculate the partial exemption calculation for you, you may export information from your software and use an Excel spreadsheet to do that partial exemption calculation. Again, there will be the need somehow to get that information from the Excel spreadsheets across to HMRC because you need to report everything to them. Again, until we know what the bridging software is going to be like, it's difficult to actually say what we need to do. But really the message is that you need to be aware of this, you need to be starting to prepare for it. If you don't use online software, then you need to be checking with your providers that actually they are going to be able to cope with this when it comes in next April. And if you're not using software, you might want to look at doing that. It's quite difficult really to make a decision though until we know fully what HMRC are expecting from the bridging software. So it's a case of watch this space, and we'll keep practices updated where we know they're affected by it as to what needs to be done. But it's be aware and look forward to chaos in the future.